Good afternoon. Welcome back to Money Control's live stream. You're watching Closing Bell with me, Lovisha Darad, and my colleague Yatin Mota. Well, a very quiet trade on Christmas Eve. We did start flat following a largely lower Asian handover as well. But we saw the momentum build up during the noon. But later, ultimately, Sensex and Nifty got under the selling pressure and both of them fell flat in the red. However, Nifty, that is still holding above its 200 DMA level. So possibly some good news despite a quiet trade today on a Christmas Eve as well. Among sectors, Bank Nifty, that performed well yesterday, but it saw profit booking in today's trading session. Nifty Metal Index, that also dropped over 1% after yesterday's upsurge. What did well today was the defensive plays that took the center stage, and we saw the FMCG and the pharma counters, both of them, trying to limit the losses in today's trading session. Auto Index that faltered yesterday also saw some pickup, of course, gains led by Tata Motors after there was some news flow around that how Tata Capital IPO is going to fuel some interest among the investors as well. Yatin, despite the downward, the overall breadth was still mildly positive given the advanced decline ratio. So some optimism ahead of the Christmas holidays.
Clearly, and you can see that with the fading FI participation, most of them are on holidays, and that can be reflected in the volumes and the participation that they have done yesterday. Obviously, DIs have an upper hand. Probably their buying has led to the market breadth being better. Small cap, shares were gaining. However, with limited market losses, it was a dull trading session. Now, if you look at the gainers on the Nifty 500, we had stocks like Finolex Cables, Imami, RBL Bank. So clearly, the action was in select stocks, especially in the FNO segment. Stocks like KC International, Go Digit, Intellect saw some profit taking. And if you look at the newer IPOs, the likes of IGI Limited and Vishal Megamart, both of these stocks were doing well. So the new IPOs which listed last week clearly have been picking up some bit of momentum. But yes, with lack of FI participation, the market continues to be dull and in probable control of the domestic funds.
Yeah, so no Santa rally that we are seeing at this point of time. But let's look at some of the top Nifty 50 gainers and losers. Well, definitely Tata Motors that topped the list as at the top Nifty 50 gainers, because there was sources which told Money Control about the plans of Tata Capital's 15,000 crore IPO plans. Adani Enterprises that also topped the list after Adani Defence Inc. packed with Airworks to buy 85% stake in it. BPCL also featured in the list and surged about 1% as it plans about 6,100 crore rupees refinery project on Andhra Pradesh's east coast. Eicher Motors also featured in the Nifty 50 list, and we saw consumption plays like Britannia, ITC also did well. If you look at on the contrary, on the flip side, Power Grid saw fourth straight day of losses and featured among the top Nifty 50 losers pack. JSW Steel, after yesterday's rally, that also saw profit booking and was featured in the top Nifty 50 losing list. We saw metal counters apart from JSW Steel. Tata Steel also saw a bit of an overhang in today's trading session. SBI group companies, SBI Life as well as SBI, that was also down about 1% each. And IndusInd Bank fizzled out in the trade too after yesterday's rise. But yes, broader indices did better than what the benchmarks had put out on the show compared. Yatin, what do you gather from the broader end of the markets?
So, as I mentioned earlier, most of the stocks in the FNO were witnessing some bit of buying. If you look at defense stocks, some bit of brokerage reports, which we'll talk in detail. Because of that, we saw some momentum coming in. Probably in the FNO segment, we had stocks like, Biocon, Hindustan Copper doing well. Tata Chemicals also on the back of the buzz of Tata Capital IPO, as you're mentioning, was doing well. Real estate stocks, some bit of lackluster trade. Lodha down, 3%. Siemens, that stock continues to remain under pressure. And Vedanta among the metal names was slightly under pressure.
All right, let's break down what the stocks were in focus on the street today. Of course, Tata Group stocks definitely grabbed investors' attention. We saw the likes of Tata Investment, Tata Chemicals, Tata Motors, all of them saw significant traction. Now, this came after the group is likely to start work on mega 15,000 crore IPO of Tata Capital, which is its NBFC arm. Now, Tata Motors was the top Nifty 50 gainer and it reacted positively as, as it expects to benefit from the direct exposure to Tata Capital through its about nearly 5% stake in Tata Investment. Tata Investment Corporation also was the biggest gainer, as investors expect a certain ripple effect of Tata Capital's listing on the firm as well. Apart from that, we saw Tata Chemicals also gained in tandem. Now, majority of the group companies were buzzing on the hopes of certain value creation if Tata Sons or its subsidiaries list. The IPO comes in line with RBI's requirement of listing upper layer NBFCs by September 2025. So the offering is expected to raise over 15,000 crore rupees, and it will include a mix of primary as well as secondary share sales as per sources to Moneycontrol. Yatin, after the stellar listing of Tata Tech in more than a year, investors could be looking at Tata Capital for further value unlock. What do you make of it? Can we see certain optimism coming in?
Absolutely, it seems so, because the size as per the Moneycontrol report is 15,000 crores, and the kind of retail frenzy and the retail money which is coming into IPOs, clearly a Tata Group company coming after many years would catch investor interest. But yes, overall the IPO market and the buoyancy in the markets would mean good subscription numbers, at least for a Tata Group company.
All right. Let's take another stock in focus, which was your PG Electroplast, because that stock gained as much as 4% in today's trading session. The rally did follow its deal with Whirlpool India. It signed the agreement for manufacturing Whirlpool's semi-automatic washing machine models. Now, PG Electroplast is already an existing supplier of Whirlpool's branded ACs. So this is just an addition of a requirement of PG Electroplast. If you look at PG Electroplast shares, it has given back-to-back stellar returns since 2021. So far this year also, the stock has gained more than 4 times. Yatin, recently the company showed a revenue guidance of 54% for FY25 and even net profit guidance at 82%. So it looks like the good days are ahead for PG Electroplast.
I think recently they did a QIP also, the fundraise probably to expand their facilities. Motilal Oswal, AMC, they subscribed nearly 20% of that issue. So good institutional interest was seen. And with air conditioners already in the portfolio, with new expansion in the washing machine segment probably augurs well. I think that is the reason why the stock was also quite buoyant in trade today. But moving from PG Electroplast, which has already done well, to defense sector, which is expected to do well. Now, 2 brokerages came out with a report on the defense sector. Let's talk about Elara Capital, because they have included HAL, which is Hindustan Aeronautics, as their top pick in the defense segment. They believe that the stock could touch levels of 15,465. BHEL also is one of the brokerage picks when it comes to antique. But now if you talk about BEL, Bharat Electronics, there also Elara has a buy with a target of 345. Bharat Dynamics target is 1300, and the kind of opportunities this domestic defense companies are getting, according to Elara, could fructify in the next 12 to 24 months in terms of higher orders. In terms of exports, there are opportunities building for domestic Indian companies, especially the PSU lot, wherein the government is looking to proactively supply arms to friendly nations. Also, if you look at the India's import bill of weapons and defense systems, that has gone down by nearly 10%, indicating the kind of indigenization that we have seen in the domestic market. So the Make in India program, especially for the defense segment, has worked well with companies and new engines tying up with companies like HAL. The opportunity moves higher. In fact, the GE engines which are now delayed are expected to get delivered March 25 onwards, which could mean better order execution for HAL, along with another opportunity of nearly 1.25 lakh crore of additional orders.
That's right. So defense, we did start the year with a defense favor play, but that got fizzled out. Hopefully the new year is going to be favorable for the defense stocks. But let's move on to another stock in focus, that is your SBI cards. Well, the stock did see a drop of about 1% in opening deals, and it's one of the but it did recover some of its loss and it has settled flat in the green. Now we saw SBI card November spending market share that fell month on month to about 15% compared to 15.8% in October in last month. The firm's spending market share fell about 20% year on year, while the industry saw a growth of about 5%. Now, SBI Card has been underperforming for some time now. It can be attributed to its worsening asset quality as the company is possibly in early stages of an unsecured lending crisis. We are seeing that gross NPA ratio is also at its weakest in 12 quarters, and even the credit costs have too shot up. Now, in spite of this, Morgan Stanley did maintain and come out with an equal weight rating on the counter and has said that the fall in the market share reflects the RBI's impact on corporate card spending. Yatin, as more and more people use UPI transactions for smaller payments, higher payments are resting with SBI cards, and in turn it has impacted its asset quality too. So unless there is a change in the business model, the company is expected to see a bumpy road ahead as well for the stock.
I think the central bank also made it clear that unsecured lending in the country is growing too much. They need to control. Obviously, credit card is a part of that personal loan stroke unsecured loan segment. Specifically to SBI, not only they are losing market share, but the overall number of spend, the value of spend per card is also reducing, impacting the overall earnings quality. But in today's trading session, the stock was higher by about 0.5%. In tandem with the market overall direction. But yes, the stock has been a marked underperformer for the last 2-3 years.
That's right. But on that note, we have the markets which is closed tomorrow on the eve of Christmas. I hope your plans are set for tomorrow, Yatin, for Christmas.
Yeah, absolutely. Absolutely.
All right, with that, we have come to an end of this edition of The Closing Bell. Tomorrow is a market holiday, so Merry Christmas to all of you. We will be back with markets on Thursday. For now, it's a wrap from Yatin and me. Thank you for watching and stay tuned to moneycontrol.com for all the news updates and market insights.